Good morning, good afternoon, and good evening. Welcome to our July webinar. We're expecting a large turnout today, and we're very glad that you could join us. My name is Lynn Railsback, and I'm Vice President in charge of peer learning at CapPlus Exchange. I've met some of you at some of our in-person events, and I'm glad to be able to connect with you and others this morning. Let me begin with an overview of how the webinar will work, after which I will introduce our speakers. If you have any technical problems during the webinar, please contact David Sheffick. You can see his contact information above. And we will be making a video of this webinar available later, so you'll be able to share it with others. And we'll also have a LinkedIn discussion after this webinar. I just wanted to let you know who is in the audience. And as you can see, it's diverse, even though many of the participants are coming from financial institutions. And what you can't see is that participants are joining us from 30 different countries. So that's very encouraging. We'd also like to ask that you participate fully in the webinar by submitting questions, comments, or other thoughts via the chat or questions box in the GoToWebinar control panel that's on the side of your screen. We may share these questions with speakers as appropriate throughout the session. And then we will close with a 15-minute period for questions and answers. So please do submit questions and comments. Before we begin, I just want to give a bit of background about CapPlus Exchange. CapPlus equips financial institutions in emerging markets to deliver finance profitably for social impact. You can see some of our results here on the screen. I would now like to introduce our speakers. We're very pleased to bring you this webinar in partnership with Khushhali Bank. Khushhali is based in Pakistan, and Ghalib Nishtar is the founding president of Khushhali Bank, which is Pakistan's largest microfinance bank. He is regarded as the pioneer microfinance banker of Pakistan's burgeoning microfinance industry and has been a critical force in demonstrating the success of microfinance in Pakistan, with Khushhali Bank as a leading benchmark. Lisa Thomas, our second speaker, is an impact investor, entrepreneur, and consultant. She's been working in venture capital and private equity investing, strategic planning, governance, and operations. She has worked with companies in 20 countries in Asia, Africa, and the Caucasus. She is currently focused on investing in small and growing businesses in emerging markets with a gender lens to align investment with economic equality and to meet the significant capital gap for high growth businesses. Our speakers requested that we begin with a quick poll just to learn the current status of the webinar participants today. So David's going to be launching a poll here. Here it is, in which we'd like you to tell us in what time frame do you think your institution will start an SME lending program. Your choices are: we already have one. The second is in the next 12 months. The third is in the next 2 to 5 years. And fourth, we're not planning on starting an SME program. Please go ahead and select your answer. Meanwhile, I'd like to say that we're familiar with Khushhali's transition because CapPlus provided capacity building services to Khushhali from 2013 to 2017, contributing to building Khushhali's SME credit processes and providing support in credit risk management, IT, communications, marketing, and change management. We were very impressed by Ghalib's leadership and the board's commitment to the process. And we're very excited to have this opportunity for Ghalib to share Khushhali's success. So it looks like we're about ready to wrap up the poll. The poll is closed, and look at this. Everybody already has an SME lending program, so that's wonderful. And with no further ado, I will be turning this over to Lisa to dive into the webinars. So Lisa, it's up to you.
Thank you very much, Lynn. Appreciate that. If we could just flip to the next slide. And one more. There we go. Thank you very much. So we wanted to give a little bit of context for our discussion today. Since all of you are already doing MSME lending, this will not come as a surprise to you, but 60% of the global banking revenue growth from 2010 to 2020, which I know is approaching very quickly, will come from emerging markets, which is very exciting. And MSME lending is a very underserved segment. I should actually say MSME in general, which includes the lending portion. In addition, about $350 billion is coming through as estimated banking revenue from MSMEs in emerging markets. So financial institutions globally are considering this segment as a very significant opportunity to capitalize and earn significant returns. Next slide, please. So please let me hand the mic over, if you will, to Ghalib Nishtar, the CEO of Khushhali Microfinance Bank.
Okay, Lynn, thank you, and hello everyone. I'm privileged to be presenting this case study in Khushhalibank. Pakistan, as some of you may know, is a large country with a population of over about 200 million people. The banking penetration, we have lots of commercial banks, but it's fairly low, about 15 to 20%. And especially downstream, there is hardly any formal financial service available in the MSME space prior to the year 2000. So basically, in 2000, there was the decision made by the government to develop the microfinance sector in Pakistan. And they provided the policy statement, developed the regulatory frameworks within the central bank for licensing, regulation, supervision. And Khushhali was to be the first profit to be established in Pakistan. This was to be also a demonstration that microfinance, which was happening in Pakistan to a small extent, but mostly by the NGOs. And we wanted to really try to see if it could fit into the formal financial system of the country. One, it would also be able to be supervised and regulated, and secondly, it would have the ability to take deposits and would build a sustainable model which would fund the growth of microfinance. Given the population, the market was huge. This was the start, and I think obviously initially there was some reluctance of the private sector to invest, and mostly the large government commercial banks invested in Khushhali, and some of the private banks also, and that was the start of the journey in 2000. Things generally went well, and gradually the private sector started to invest in microfinance, and the second microfinance bank was established after a year, and the third and the fourth and so on. And all these banks were through private foreign direct investment started to come up in Pakistan. Today there are about 11 banks which are functioning as regulated banks, and they, along with the MFIs, cover the microfinance landscape in Pakistan. We were obviously, like I mentioned, government, but the policy was that banking and microfinance has to be in the private sector, privatized in 2012. This was a consortium which decided to buy the shareholding of Khushhali Bank. It comprised one of the commercial banks, which is one of the most progressive and large commercial banks, as an anchor investor, and a number of international funds from Europe and the US. And this was June 2012. And I think the investors were basically funds who had worked across the world, predominantly in this MSME sector. And they saw an opportunity for MSME finance in Pakistan. There was no bank available for SME to buy out. So the idea was that we required to scale Khushhali and for microfinance and build the capability to do MSME finance. And that is where our partnership commenced with CapPlus as well to help build that capacity. I think the first task which obviously followed was to get the new board in place and the board and the management to work on a strategic plan to transform the institution into a commercially viable, high-performing entity. And this was quite an intense process. And over the next 6 months, and by January of next year, 2013, we had the strategic plan in place, and the plan went into execution. So it's really been 5 years now since we implemented the plan. And as we speak today, we are an MSME bank and also doing microfinance. And we are the largest and in terms of the best performing microfinance bank in Pakistan. Next slide, please. Okay, this is what I just said earlier. I just wanted to kind of reinforce that by the numbers. The baseline, the 2012, our active clients, our branch network, our financial performance and returns. As you know, we were predominantly public sector dominated, so profitability returns was not the major concern. The priority was to lend to remote areas, marginalized populations, with relatively low interest rates, and high-risk markets clients. But there was support available to us through subsidized credit lines and grants coming through government or through multilaterals. And that was how we're sustaining our operations over the years. But this all changed with the privatization. The grants disappeared, the subsidies all went out, and we were to run now totally commercially. So things have gone well, and we've increased our client base almost 3 times to what it was. Branches have expanded from 106 to 141, but this also has a lot of branches which were closed during the period because they were not sustainable. So each branch had to be evaluated commercially and on its viability. And if on a certain timeline they were not making even or making profits, they had to be closed. So this is the net figure. And there's been growth in all other areas in terms of assets, in terms of loans, deposits. And that is again a major change because pre-divestment, our funding was through the Asian Development Bank credit line. And now this had to convert to deposits. So deposits became very critical for the sustainability and growth of the bank. And today our portfolio is entirely funded through deposits. Although we have a large number of standby lines available from commercial banks in Pakistan and also through international funding arrangements. ROA and ROEs also ROEs are 3.4%. The ROE substantially went up. And in terms of our rating, we are rated among the top microfinance banks in Pakistan with an 18% market share. Next slide.
So in the previous section, Ghalib gave us a little taste of Khushhali and the results of the transformation. Now he's going to talk about how he and his team got there. But first, we are going to take our next poll. So if everyone could just be ready to answer this question. How often does your institution conduct strategic planning? Number 1, every year. Number 2, every other year. Number 3, every 3 years. Number 4, more than 3 years. And number 5, we don't do formal strategic planning. Everyone can get your answers in, and we'll keep the poll open for a little bit of time. Make sure that everyone can get some time in here. And while you're doing that, I just want to make comments. On the previous slide, this is a very short period of time for the transformation at Khushhali to take place. And one of the things that we'll be talking about a little bit later, which I think we forgot to mention before, is I happen to be working for one of the investors at the time that was invested in Khushhali Bank. And I was sitting on the board, so we'll have a great discussion about the support of the board in this process. So hopefully everybody is done voting, and we can go to the results. Okay, so it looks like we've got a lot of people doing, actually most everyone, 90% are doing some sort of, 100% are doing some sort of strategic planning. Half of you are actually doing it every single year. And then we've got another good chunk of do it every 3 years. Just depends on your institution. So if we could please go to the next slide. So Ghalib's going to talk about now how important the strategic planning process is in this transformation and how they went about this.
The strategic planning was very, very intense. A lot of debates, discussions. But I think it's critical to the success of the organization. And to come up with a good, well-articulated plan, and then to also follow the plan religiously if you want to achieve the timelines that envisages the plan. So we got onto the plan and its implementation. And there was a lot of change which was required because, like I mentioned, with the public sector background, things were in a way much simpler. Life was easier. We had a single product to sell, and we did not need very complicated skills to manage that product. It was basically a solidarity group model which we were pursuing, and there was not much expectations in terms of financial performance. So support was coming from the government, and life is much easier. But now this had to change, and the focus was commercial orientation, sustainability of the organization, and also, like I mentioned, with the new framework being a success, a lot of new banks came. So now 11 banks, and the competition increased as well. So we had to, foresee that competition and be able to meet that. So these were required a lot of change in the business model, and we hope that if we could be able to get our business model right very quickly and be able to address these challenges, we would be then able to replicate this across institutions and achieve growth and stability and bring innovation, leading to high returns of 25% plus. So next slide, please. Okay, so like I said, the change was, in every aspect of the institution, we realized wanted to change. We just had a single product, but now we need multiple products in the market, and both on the asset side and also on the, like I mentioned, on the liability side, because we had to fund these asset projects. And within the asset products, we obviously the focus was now on these totally new segment, which was the MSME segment. So we were changing segment also. So we required the multiple asset products to be able to serve these multiple client segments. So this required a lot of information and became fairly complicated. The focus was no longer poverty alleviation, but it was commercial sustainability. And we were looking at large numbers, like I said, we almost tripling our client base. So we realized that maybe our branches would not be sufficient to be able to handle these volumes, because we were targeting mass markets and we required multiple channels. Deposit mobilization I mentioned. We needed to be efficient to deliver to our clients, because Khushhali was not the only bank. And if we were slow in delivering, the client would just walk next door to the next bank. And now we see wherever we go, Khushhali is obviously opens a branch, and within a year, you see several other banks opening branches in that vicinity. And unfortunately, picking up a lot of our staff as well. So we needed to be quick to be able to respond to these challenges, both in terms of our human resource, service delivery. And for that, obviously, technology had to be ramped up, and technology would be the driver, not just a support function. And massive investment was required in upgrading the skill level of our staff. And this is where a lot of help came from CapPlus to do the MSME upgrading of not just the policies, the frameworks, underwriting methodology, the people, the trainings, monitoring systems, everything. And also to be able to do all this, we realized it was not a commercial bank, so we had to do it smartly, and we had to do it efficiently. So we had almost a more than 3-year program on building the MSME capacity within Khushhali, and that was a challenge. We realized initially we thought we could convert our existing sales force into the MSME loan offices. But then we realized that there were several challenges, not just in terms of building the capacity, because they were used to doing the same thing over and over again, but also in terms of a cultural change, a mindset change. So we subsequently decided that we need to build a totally new loan force. So we had to start from scratch and train the officers who would, train and deploy into the branches. So that was a challenge, and then we had a development support from CapPlus, and we got the quality assurance and subsequently the monitoring frameworks to be able to monitor that. And obviously improving the return was also critical in terms of the expectations of the new shareholders. So there's a lot of change. Next slide.
Before we move on to the next slide, Ghalib, I just, those points that you were talking about, you had said that you really had to start from scratch with new people focused on MSME and training them up, and it was a massive cultural shift for the bank. Can you talk a little bit about how communication played?
Yeah, okay. I think communication was something which I realized from the very beginning was very critical, because the change was, massive in terms of everything. The shareholders changed, the board changed, the whole business model changed, and there was divestment itself brought a lot of uncertainty within the organization. And we had to keep our communication channels open across, and we had a fairly large network. Even then, 5 years ago, there were about 100 branches diversely all over Pakistan. So we had to keep them communicating to them. And then they had this change is going to be there, and you can come up to it and remain focused on building your capacities. And obviously the change would be eventually good for everyone, the organization and the people. And we try to build mechanisms and systems of incentivizing change so that they would feel that the change is bringing the improvement, not just in terms of their working conditions, the way they do business, in terms of their salaries, in terms of bonuses, in terms of sales incentives and all, but also there was a totally new set of people coming into the branches, the MSMEs. That again required a lot of communication. So because some of them felt that this is the new career of Khushhali, so all the hundreds of people who were there become obsolete, and this is some kind of a different class of people to keep them together, to work, make them work as a team, and to be able to deliver seamlessly was a huge change, and this required communication. And at all levels, not I did it personally, myself through personal wealth, through communications, but everybody in the organization, the senior management team, the distribution leaderships, they had to buy into this and then communicate it further to be able to sustain this change. Otherwise, there was a huge risk. The organization could just break up, and that was a big challenge where Lisa rightly, communication was a major tool to support us. Okay, so moving on to the slide on the process that was undertaken in terms of the transformation program within the strategic plan, and these were the 4 or 5 steps we thought we could take. Firstly, I think the institution required. We were not positioned right. We were really at the bottom of the pyramid, and at that position to build a very high-performing, profitable bank was difficult. I mentioned the products and services, the channels, the operational efficiency, and if we get all this right, this would obviously lead to improved performance. Next slide.
And I want to interject one question also from one of the attendees here. What are the most critical KPIs to focus on and monitor the progress closely throughout the transformation process? Maybe if you could just highlight a couple of the key indicators that you're watching.
I think there was a change. Like I said, there were changes everywhere. So there were KPIs for every area, for every focus area. And one, we had to make sure that while all this is happening, we are not slipping on any of those, because one was dependent on the. When all this was happening, I think the most critical was the bottom line. We had to keep the bottom line running. I mean, the shareholders' expectations. We could not say that, okay, guys, we'll deliver for you, but wait 5 years, we need to invest. And then you will see the results. We had to, like I said, in terms of the staff, we had to keep them engaged. We had to, give them confidence in terms of the results which were coming, the successes, small successes, and to show that they could do it and we could reach the next level. The same was for the shareholders also. So I think the performance indicators of operational and financial, we were very closely following them, that we do not in any way slip. So I think the most important was obviously the bottom line figures, but the rest also fell into the matrix.
Thank you.
All right. So I think the first point I mentioned was about repositioning. Khushhali was really rural, bottom of the pyramid, very clients which were at the cusp of income generation and social protection, very low, and we had to move up. We were very rural. We tried to balance ourselves, move forward to the urban markets, which required new products and services for those markets. This would also help us in building portfolios which were more balanced, where our concentration would be diversified. And also, I think in terms of savings deposits, we felt that the deposits would really not come from the same client segment. So it would probably be a much higher client, economically threshold clients, which would contribute to savings. So for that, we have to reposition the bank, and that is the movement you're seeing both on the urban markets and also moving up in terms of for deposits, where the largest player in the market was the national savings and the commercial banks, and also moving to a larger ticket size with the MSME loans to bring more efficiency and sustainability to the portfolio. Next. Okay, I think looking at the time, I think I'll just quickly go through the next 2-3 slides. This was the segmentation, which was done on the product level. We were doing the first bit, the bottom of the pyramid, group loans. We moved our group from group loans to individual loans, both with some of the clients which through debt consolidation. Our clients were borrowing through multiple institutions. We got them in, gave them a higher individual loan. Also graduated some of our clients. We had a large number of clients, and also added individual clients. We built individual portfolio. Today, the individual portfolio is almost as large as the group portfolio. And then moving on to the SME space, because we required some time to build the MSME program. So the first step was individual, and while that was relatively faster and easier, we bought time to build the MSME, and now we're doing MSME, which is now rolling out. Almost it's rolled out to half of our branches and 5% of our portfolio. And currently, we're growing in all areas. The growth is about 35% a year, but more so in the MSME. MSME is growing at about 100%. The individual portfolio is growing at about around 30-33%, and the group loans continue to grow, but at about 10 to 12%. So gradually, the MSME is building and getting more of the space within our portfolio. Next slide. And yes, this also through the MSME portfolio, we also brought different products for the urban settings and new for the rural markets, agriculture, livestock. Recently, we started housing and home improvement loans because their requirement was for a slightly larger loan, which we could now offer through the MSME. So MSME gave us more options, and it's also we were able to secure our portfolio from a risk perspective. So there were multiple objectives in terms of risk, in terms of diversity, in terms of profitability and sustainability, which we were able to address through the MSME products that we launched. Next.
So just a quick question before we move on. You had just mentioned that there were lots of different targets. Looking at risk, looking at profitability. The MSME loan compared to the other loan products, what is the profitability relative to the other products on the MSME loan?
It's much. I mean, obviously, it's much higher given that the loan officers are handling a much larger loan size. For a group loan, it would be about 50,000, which is $500, and the average individual loan would be about $1,000, while the MSME loan average size is about $2,500 to $3,000. So where there's more due diligence and work required, but the loan size itself makes it much more profitable and efficient in terms of profitability.
So now we're going to shift on to the change management. As Ghalib has talked about throughout this presentation, there was a massive cultural shift that occurred at the institution, and I was lucky to be part of that transformation as an investor and a board member. What we have here on this slide is just the overlapping pieces that needed to be in place in order for the transformation to really take place. So Ghalib's talked quite a bit about already the business plan elements, if you will. So the need to train and hire and onboard new loan officers, trying to find the right people, which sometimes can be very difficult. At some point, Khushhali ended up becoming the institution that was training loan officers for the entire industry because they were doing such a great job. People were poaching the employees from Khushhali. Hiring new senior management, developing the new training programs, and then also the communication that he talked about before was such a key piece to this, to make sure that people understood both inside and outside the institution that this was a forward-moving change, and it was going to grow the institution, and it was going to be a very significant benefit for all of the various stakeholders. So, and he's also talked a lot about already the support, so the external support of CapPlus Exchange and the work that they did along with the great team at Khushhali. One of the things, though, that we haven't yet touched on, which we thought was very important to talk about, is really the support and buy-in from the board members. You obviously need to have buy-in from the management team to be driving the transformation forward, but we found it was also very important to have buy-in from the board members, and also just to have a little discussion about how significant it was to have their support for the transformation. So Ghalib, what was the biggest challenge for you for getting the board and the management team on the same page?
I think it was one of the major challenges because it's very diversity in terms of the people who were engaged with. The board comprised hardcore commercial bankers, very limited insight into micro, small business, and we had investment bankers on the board. We had an SME expertise, and then we had a large force which was from a legacy, public sector, and then converting to a commercial. So, and the change itself, which the pace of change. So I think there were a lot of expectations. There were expectations from the board side, and there were expectations from the management. And the challenge was to bridge these expectations and keep them engaged in what was happening from day to day to management and from every quarter at the board level. So I think bridging them together, bringing them closer, and ultimately it was important that they believe in their strategic plan, and they are, they believe it's as previous as anybody else's. So that faith in the business plan and its ability to succeed was the biggest challenge. Obviously, with time, when the results started to come in, that became easier, but initially it was quite a challenge.
Mm-hmm. Yeah. If I recall, strategic plan after the change in ownership. So when you get better and where the various were coming from, and for those of us.
Lisa, I'm afraid we're not hearing you. Somehow the connection got messed up. Ghalib, maybe we should proceed since we've lost Lisa. Shall I move on to the next slide?
Okay, let's go.
Sorry about that. I'm back on.
You're back. Okay.
Sorry about that. Let me just finish that quick point. Is that this was not a quick fix. It took a long time to get the strategic plan in place. There were a lot of different iterations that took place between the management team and getting feedback from the board. And I think it took us about a year to get to a place where we were very comfortable. And then, of course, we would continue to look at that every single year to see if we needed to make adjustments. So with that, let me hand it back over to Ghalib.
Okay, so I think we're running a little slow, so quickly. The results started to come in, and that is, they say nothing succeeds like success, and the outreach improved. Portfolio not only grew substantially, but the quality of portfolio also improved. Next slide. Funding became initially a challenge, and then the deposits started to flow in. So that was very heartening to see that. But the challenge again was here managing the cost of deposits, because we were running a subsidized, used to that subsidized lending, and to manage the costs, which we're doing fairly well. And obviously, the equity kind of has almost doubled, and the returns have gone up. Next slide. And today Khushhali, as I said in the very beginning, is today the largest microfinance bank in Pakistan, micro and MSME bank. And I picked up 7 of the 11 players, the better players. We stand, I think, number 1 in all assets, loans, profit. And as this is a bit dated, but as we speak to deposits as well, we are the largest in all aspects. Next. Okay, so now quickly, where do we go from here? I think achieving these milestones, and after every milestone there's a new challenge. The current challenge that we're looking at is the technology and the big data, the age of big data. And so we focused on that. We've just acquired the new core banking system, because to be able to operate efficiently, it's Australia's one of the best rated systems globally. We've got the entire infrastructure from Oracle, and we're acquiring supporting tools like business intelligence, mining, and building a digital financial strategy for the new age, because I think this is something which will in the future. Some of the studies say that if we are able to leverage on this data, our profits could improve from anywhere from 5 to 50%. I mean, these are extreme ranges, but that is the potential of leveraging on what we have today, provided we are able to do that. So this is a new frontier for Khushhali. Next. Okay, so just to recap everything, I think first of all, it's a huge country with a tremendous potential in the market for small business, and we are really have the first mover advantage. The strategic plan was very, very critical, because with so much change taking place, if we did not have something to follow very precisely, we could have lost our way along the way. So I would say strategic planning is very, very critical. Getting the board and the management to see in the same direction, believing in the same plan and the same numbers that we are thinking is very important as well. Culture shift is a major challenge with the transformations and managing that. We never realized that could really be a challenge, but it is, and it does become a challenge. And people obviously are always critical people. We had a lot of changes. I think from the legacy team that I had, there's been a lot of change. I had 9 people reporting to me prior to 2012. I still have 9 people reporting to me, but 7 of them are new. 2 are from the old team, legacy team who are founder members, and the rest are all new. So it's a mix and match of both, but it's worked well. And again, managing them from different, coming from different areas. And obviously, to succeed in all this, you need to incentivize the process of change. And it gets much easier if it's done through incentives, because without that, it's not really sustainable. So I think I'm on time with that.
And I'll add one more bullet to that. In that, from the board's perspective, it was absolutely critical to have someone like Ghalib in the CEO role. He had the vision to push this forward and understood the dynamics of all of the folks on his own team. So even though when the change of ownership occurred, everyone was excited about the future and moving everything forward, it was also really difficult. People weren't sure, are we going to be able to do this? What if I fail? And he was absolutely fantastic in really filling that gap of communication and making sure that people understood where the institution was moving, how they would fit in with it, and then communicating that to the board. And I think if we didn't have him in that role and really making sure that communication was flowing in both directions, I really don't think this transformation would have succeeded in the way that it did. With that, I think there were questions.
So I see we have a question here about the technology evolutions that Khushhali took. Ghalib, could you speak to that? Ghalib, if you're speaking, we can't hear you. Lisa, are you in a position to answer that question since we're not hearing Ghalib? Oh, there he is. Ghalib, are you there?
Yeah, I can help. Yeah.
Yeah. Speaking of technology, so can you say a bit more about the technology evolutions that you undertook to drive business growth?
Sorry, could you just repeat it?
The question is, what are the technology evolutions that you undertook to drive business growth?
I think there was phase one, which was for the last 4 or 5 years. I think we needed a lot of upgrading in terms of our technology. Our system was not geared towards having the volume that were coming in, the multiple products. Building a new product was much easier than really configuring it on system. And so I think there were multiple challenges with our core banking system and the support we were getting, which was not really up to speed for this kind of thing. But we kind of improvised and were able to do it, but it took a lot of time. And I think this, the way the pace of the market is changing, we realize that we'll have to change the system. So there was those kind of challenges the last 3-4 years. But now I think what we're doing now is to strengthen our infrastructure, which this investment will do. And the challenge is building beyond the core banking and the system that we're requiring, and to connecting to the payment system, the entire e-commerce ecosystem which is coming in to be able to work with them. So the marketing, the tools, going through the social media and all that is a new change which we're focusing on now.
Thank you. We have another question regarding risk management, that with such, in many cases, when organizations go through rapid growth, the risk management becomes a weakness and a challenge. Could you speak to how you've addressed that?
Yes, I think it's a good question, because when we got the business plan in place, I realized that this was a very ambitious plan, and the growth rates would go to maybe 40 to 50%. And we did touch, we went over 40, we just consolidated now to about 30, 35%. And so before we opened up this, we had to strengthen our internal control environment. Because if we just leave it to business, then business would grow. But so I think we built a totally very new and strong risk management function, which was looking at the risk frameworks. We strengthened our audit function. We strengthened our compliance function. And one of the innovations we did in terms of risk, which I think we're the first bank in Pakistan, that we also built we built a social and environmental risk as part of our risk management function. Normally risk is only, portfolio risk, market risk, operational. So that element also was built into that. And so we were able to, balance our risk concerns, the client protection concerns, and still able to grow. I mean, and made sure that they don't choke business growth, but this will be strengthened. So the risk internal control frameworks have worked, and the client side also, it was supportive. And I think we just got the SMART certification today, the gold certification, and that was part of that process that was built into that.
Wonderful, thank you. We also received another question about the human resources challenges. And the question is, as you have moved to needing and having more skilled staff, have you had to let go of the pre-existing staff who couldn't kind of change with the organization, or were you able to bring most of them along and continue to be part of the team?
Yeah, I think that was, like I mentioned, there was a lot of change at the leadership level, at the functional head level, because there I needed a lot of new skills. And the two I've retained are exceptional people. They're founding members, and they also sent a message that, it's not all new. I mean, people who performed are there. So a lot of people are loyal to them. So they saw that that was there. And we also tried to work with the existing people, but just add people, new people where, there were gaps or there were, opportunities, but not randomly. So we tried to work with, at least our strategy was to work with the existing team. So the new inductions are more at the leadership level and a bit downstream, but it's predominantly the old team which is delivered. And those within the old team which could not come up, well, they had opportunity, so they went to other banks.
Thank you. Another question. As you look back to where you started with a focus at the base of the pyramid and your recent growth, what's your observation about whether there's been mission drift in the course of meeting, driving for growth and profitability, and what your new shareholders are expecting?
I think there was, it's not a mission drift as such, because, at the leadership level, the key people, myself and my two people I have, there was a continuation I think a lot of our shareholders were also socially responsible investors, so they also supported. But we looked at new ways to be able to support our clients, and so we were conscious. And the very first thing we did was to build on the board social environmental committee, build this system. So this was a commitment that we were not drifting away. We were just trying to focus on efficiency and commercialization, but not really from the client's perspective. So we have a huge amount of client loyalty, and that so in our case, I don't see a mission drift. What has happened in Pakistan is that the market has become segmented now. The banks, the microfinance banks, are really not really doing poverty lending, so they've gone up a little. And there are a lot of government programs, NFIs, who are working at the very low space that we've left. So that space will be filled by them. And we've gone up, but there is no mission drift.
Thank you. I have one more question from the audience, and then after that I'll invite Lisa to make any more closing observations or comments. The last question from the audience is, could you describe the new software you're acquiring to manage your customer relationships?
Yes, the CRM, yeah. This new system is, there is the core, but then with the core there is, there is a CRM, there is, we've also adding business intelligence. We've got a call center. We've started debit card, and so that CRM is essential. So it is there, yes.
Okay, thank you. So, Lisa, as we wrap up, is there any last observations or anything you'd like to share?
Well, I think one additional item that we touched on briefly, but I think is actually very significant based on some of the questions that we saw come through about mission drift and very focused on microfinance, is that MSME lending, or the small business lending, is quite a bit different from the character-based lending that we see typically in group loans. And so it really is a very different mindset and a different type of analysis. And I think not only are you building up a whole new team, but it's building up that new mindset. And sometimes that means you do need to get some external support for that, because it's something your institution just hasn't done before. So I just wanted to emphasize that point, considering it seems like we did have quite a few microfinance institutions on the line who may have only been doing group lending or individual lending that's still character-based.
Thank you, Lisa. And Ghalib, any final remarks?
No, I think it's been quite a journey, but an exciting journey, and I'm happy it's ended the way it has. So I'm delighted, and thank you for the opportunity to present today.
Well, thank you to both Lisa and to Ghalib. And if you have any follow-up questions, you can direct them to CapPlus, and we will get back to you with answers as we can. So thank you very much, everyone, and have a good rest of your day.